Yeah, so the question was about sizing. So sizing, what we're usually looking at, again, trying to have that, going back to that, how the portfolio, we want it to be, all the cash flow is not correlated too high in one area over another. And so if you were to look at the way I've grouped that on that slide, and you were to sum up the various position sizes in these various types of industries, you'll find that in most cases, we probably rarely exceed a 7% total position in one area. But like if you were to take just certain categories, some of them we might even have lower than that 7%. So as an example, like MasterCard and Visa, we might have 3.5% in each, which totals to a 7. Or we might have in the advertising in Facebook and Google, about 3.5 in each totals to a 7. But we also are going to size it based on, of course, the expected return. If the expected return is too small, we might want to just have a small sliver. And so it really is just an art and something that you develop, I guess, as you do it over long periods of time. Like I said, we're looking at a bond table of what's the expected return, what's the risk associated with it, and we want to make sure that the portfolio is robust against various outcomes.
Understood. And part two, real briefly, do you ever hit a point of something going up so significantly in price that you'd want to sell out of it?
Oh yeah, sorry. And yeah, so definitely that is a possibility, but it just becomes very hard. You want to really give that a lot of thought before you do it, because like I say, once you sell it, those taxes are gone. And so the way to do that again is that what I brought up previously about looking at the crossover. Is it worth it to sell the stock at a lower rate of return? Because when the stock price goes up, your forward rate of return goes down. Is it better to sit in this lower forward rate of return, or will it make sense to sell, pay taxes, invest a lower amount of money in another business where I can potentially compound at a faster rate? And we just try to make that judgment call as best as we can. But certainly, I mean, if something were to get too astronomical, we're always looking at what are all the available opportunities that are out there. And if something better comes along and it makes sense after you take taxes into a consideration, then certainly we'll make changes.
Gotcha.
And of course, the other time we'll make a change is if we made a mistake. We're not going to be perfect, and you might sell and move on simply not because the stock goes up. It could be that the stock goes down. Usually when the stock goes down, we're excited and we want to buy more. But it could be that there's something very serious that's changed, and we no longer see it as possessing enduring pricing power. Then we just say, look, don't get emotional about it and just cut your losses and move on.